Hello, traders. Hope you're doing well. My name is Rocky Calvin, and today we're going to be diving into, and exploring one of the most exciting frontiers in modern trading, using artificial intelligence, that is AI, to outsmart the markets. Yes. So that's what you're going to be covering here today. And that being said, the notes that I'm going to be deleting here are from previous video about ProFarm secrets, whereby I talked about the secrets or for example, the whole agenda of how pro firms think and what they expect from traders. That video is already released. It's here on this channel. And that being said, let us now dive into today's topic. So I'm going to be talking about why outsmarting the markets is hard, and how AI is going to fit in, the edge that AI provides also as well. And we're going to be talking about the practical application in trading. We're going to be talking about as well the hidden cost of using AI as well. And lastly, I'm going to be talking about how traders can leverage on AI, which this topic is kind of important and huge. This last one, which I think maybe I can be able to fit it in another video, but I'll see if we can fit it in this video. So let's begin with why outsmarting the markets is hard. Now, this start with the realism. Okay, the market is a complex adaptive system. It evolves, adapts, and punishes predictability. Human traders do struggle with the markets because of biases, that is fair greed, overconfidence, and limited capacity to process data. And also, when we talk about the traditional strategies that rely on fixed rules that often collapse when conditions shift. And in order to outsmart the markets, we just don't need better indicators. We need an adaptive intelligence, and that's where AI is going to be coming in. Okay, I've explained to you guys why it is hard to beat the markets. Just realistically, the market itself is just complex, and it is adaptive system that it keeps on evolving, adapting, and always punishing traders who try to predict it. In real sense trading, we're not even supposed to be predicting price. We're supposed to be reading it. What's happening right now? Where are we at? Where are we coming from? Where are we likely to draw to, like go to, based on liquidity points and price delivery, from premium to discount, discount to premium. Now, let's talk about how AI fits in. Now, AI will provide tools that will go beyond human limitations. So, for example, we have the machine learning, ML, you can call it, learns from historical and live data to identify subtle nonlinear patterns that are invisible to humans. You see how powerful that is. The machine learning of AI is able to identify historical and live data, some patterns that are nonlinear that we human beings sometimes cannot see. Now that's one. Number two, we also have the natural language of processing. It will be able, AI or is able to know now to read news, earning reports, and even social media sentiment in real time. As a human being, it will take you some time for you, and you'll even forget some of the important things. For example, news from, so things happening on social media, sentiments, earning reports, news, maybe war news or something just going on. But you see, AI, when it is engaged, it is able to read all this data and give you a sentiment of what exactly is going on. Apart from that, AI also fits in on the deep learning. Now, processes, it always processes, vast tick by tick data asset to detect microstructures in price movements. Now, where humans see random noise, AI can often see statistical edges, and that's how AI fits in into trading. And you see how powerful that can be when you don't have to struggle so much, looking for news all over, trying to read market sentiments, trying to read, what's going on, like, and as well as deep learning, like processing of data and machine learning, like AI fits in very well. Now, I want us to talk about now the edge that AI provides. Now, AI doesn't give certainty, it provides probability edges. Now, some ways it outsmarts the market. You just heard me right. In some ways, is it outsmarts the market. But also keeping in mind that it is not about certainty. Even we as trader, when you trade, it's not about certainty. You're not sure that this market is gonna be coming here, exactly here. No, no, no. That's the highway to losing and blowing your account. We have to adapt the probability part of it, or the probability side of it, and make decisions based on price action or what we see. Now, the edge that AI provides, first thing, is the speed. I think many of you are have heard about high frequency trading, whereby some people trade using the bots and so on. So when AI is engaged, now the speed factor is on the highest level. So you'll find that it will execute trades in milliseconds, reacting faster than humans. Because, for example, if I wanted to enter trade exactly at this point, you see, even the factor of slippage and so on will not make, like, I won't execute this trade exactly. I might execute it maybe in seconds and so on. But you see, with AI, we're talking about milliseconds. Now, number two, when we talk about scale, remember I've talked about speed, or the edge that that AI, we've talked about speed here. And you see AI can you see AI can be able to execute trades in milliseconds. So the next, we're going to be talking about scale. And let me change the color to this one, or let me change it to, maybe, no, not really. Let me change something different. Okay, that's fine. So when talk about scale, AI is able to analyze thousands of assets simultaneously. But as a human being, it will take you time to be able to, to move from one asset to another. But AI can easily detect and analyze them and give you data on what pair or asset is tradable at that moment. You see the power in that. So you don't have to struggle, trying to do all this, moving from one place to another. Now, when leave that behind, now when talk about adaptability, now the continuous updates of strategies as new data arrives, because every day these markets, for some reason, I think there's always something new going on with these markets. There's always something new going on in these markets, and that's why it's so hard to beat it, because every day there's always something new. It's like a chameleon. And I think whoever created the algorithm of these markets, they often study traders' behaviors all over the world. What we do, how we enter, where we exit. And I think that data is kind of like the AI itself. You see, AI keeps on learning by itself. So it keeps on, playing some games with that. But that's just it. So when we talk about adaptability, you find that AI will be able to, adapt, to the continuous, strategies. As new data keeps on arriving, it is also adapting. But you see, as human being, we are likely to be stuck in the previous strategies, and they not adapting to the new market environment and conditions. You see, but you see, with AI, that adaptability is well guaranteed. So apart from that, like the fourth one we can talk about is now the pattern recognition. You see, AI can be able to spot hidden correlations, like how crude oil movements, might foreshadow, certain currency shifts. It can be able to, like, spot those hidden correlations that we human beings still don't know, like we don't have, like we haven't really paid attention to. But AI can be able to help us in recognizing those patterns, and that will be beneficial to us. That is how the age, like that is the age that AI provides in this market. Now, I want us now to talk about the practical application in trading. So, prediction models, which you see, they most of the time they forecast, short-term price direction based on the market microstructure, and also AI can also apply, algorithmic executions, which will also reduce slippage, and by letting AI decide how to enter and exit trades. So that will reduce the slippage factor that most trader most traders usually go through. And apart from that, even the risk management system, whereby AI is able to dynamically adjust position sizing based on volatility of forecast and so on. And apart from that, we also have the sentiment analysis, whereby AI gauges whether new flow is bullish, bearish, or neutral. Now, one thing I want you guys to remember here, as much as this is the practical application of AI in trading, I want you to remember that AI is not replacing traders. It is only augmenting them. Now, let us talk about the hidden cost of using AI. This is what you have to be prepared for. There's somewhere I read something quite fishy. Integration, dependency, surveillance, and suppression, and dominance. I, I don't want to go into that type of AI thing, but I think there's still an agenda behind it. But still, let us use it for our good while we can, because why not? If AI can give you a better, execution, a better, pattern recognition, AI can give you better risk management. Why should you not use it? So the hidden cost at this, and remember that every age has a price. Every single age will always have a price. No matter how good or powerful your age is, there's always a price to pay somewhere. It might be so hectic. It might be at some point you don't understand what to do in some scenarios. So there's always a price. Now, I want us to talk about data dependency first thing. So, bad or limited data will automatically lead to bad executions. First thing, we talk about data dependency. And as I've told you guys, bad or limited data is equals to, or is just exact to, bad predictions. Meaning that if AI can't have good data, or if it has limited data, then automatically you're gonna be having some serious trouble. So the next one is, now you see the overfitting. So AI can memorize past markets, but now fail in like the new regimes, and that's also kind of a problem, because it remembers the past, but failing now in the new, like the new markets now. That's also a challenge. And apart from that, now the competition side of it. If everyone uses the same AI model, the edge will automatically evaporate. This is the competition factor. If everyone is going to be using the same AI model in trading, then that edge is just good as gone. It will evaporate, because these markets keep on. It's like they're always reading our data. Okay, now apart from that, we have the black box risk, whereby some AI systems can make decisions we can't fully explain. So you find it taking some, making some decisions that we human beings cannot really understand or even explain, and that's what now I call the black box risk. Now, we as human, our role is to guide, supervise, and question AI, but not to blindly trust it. Hope you guys are getting my point. Now, the last one which I want to talk about, how traders can leverage AI. I think I'm gonna do this in the next video. How traders can leverage AI, and I'm, it is gonna be just a short video, but I'm gonna be, I'm guiding you guys on how you can use it. But so far, I hope this was helpful to you. And that being said, let us meet in the next one. Remember to like, subscribe, and tell me what you think about AI. Cheers.